afternoon, everybody. It's Greg Schnell, and I am here with the Canadian edition of my market review. Thanks for taking the time to join me. Canada's been pausing here a little bit over the last week. Hasn't really done much. Pretty much where we were to start off on June the 5th, and we're on close of June 11th, pretty much within a hair of that level. So anyway, we're working sideways, consolidating a little bit after the brief early June rally. To find my blogs, you can go to the stockcharts.com page, go to the articles tab, and on the drop-down menu on the right, there's 3 different selections, and you can find me on the Canadian Technician, Don't Ignore This Chart, and Chart Watchers. Okay, for contact information, you can always email me, gregs@stockcharts.com, and on Twitter @SchnellInvestor. So our agenda today, the TSX paused at around 16,250, and gold pauses, but oil keeps falling. The next steps are not obvious. Are we in a bull market? Are we in a bear market? Where are we? And it's really a tricky one. I'll tell you why as we get into it. I did increase positions, trying to buy a couple of things breaking out, and I also tried to buy some things that were starting to base and turn higher. Stops in place under everything to make sure I'm not trapped in a long-term trade, but if things start to work out, I'll be positioned, and if not, I'll be kicked out. So that's why we're going to keep watching. Okay, so here we have the bullish percent index for the Toronto Stock Exchange going back 1996. Here we are sitting at around 59% of the stocks are on a buy signal. And you can see the 16,250 level right in here. The bottom line is this level, it's higher than our previous highs back in 2014, even the 2017 spring high. But we're struggling up in this range here where we've been visiting 3 times and haven't been able to break through. Looking at the percentage of stocks above the 200-day moving average, we're at 50%, and the percentage of stocks above the 50 was 50%, and the percentage of stocks above the 200-day is at 60%. We're hovering right around the 200-day moving average, so no real lean one way or the other. Around the 50-day and around the 200-day is sitting way down below, and it's flat and slightly down sloping, which is a bit bearish. Now, obviously, the longer we stay up here, the more it's going to start to turn this up. But the bigger issue that we've got here is just all of this overhead resistance makes it difficult. And today was, we tried to rally and pulled back all day, so nothing really great in there. Normally, this indicator here makes a ratio of that, and usually what we find is during a breakout that it will be climbing and it'll get back through this 1-to-1 ratio where the percentage of stocks above the 50 or above the 200. We don't have that. We're still kind of driving sideways, and this little twist downward wasn't helpful at all. And again, the MACD for the TSX here, just making sure it's on the TSX. The MACD just shows us below 0, and you can see back here in the September-October time frame, we wobbled below there and then spent a lot of time down there. So now we're watching to see which way this wants to go. The net new highs not getting bullish enough in Canada to get me excited, so that's a bit of a problem. The US actually had a brief spike up to a nicer level, which was helpful. And for our high-low data here, just using a moving average, we just don't have any real thrust. And so you could see the similarity back in the past here where you had a big thrust, then you kind of go sideways for a while. And the question is, can we really get going? And the Mo, as we're breaking this downtrend, doesn't really seem to be there. So it's very cautious times here. Advanced decline line. Again, a much lower high here, so this looks very bearish. We saw this in 2015, but jogging down on a cumulative line. And so here we're jogging down on this cumulative line, and we don't, it's not ugly, but it's, it needs to bounce pretty darn soon. Otherwise, we're going to have a really major breakdown. And again, looking at it through a moving average here, we're just barely above 0, so the actual data goes way back and forth, really jiggly, so we use these 2 different methods of smoothing it. A continuous one where we just add the information from the day before, and then the moving average, just keep track of, in general, the last few days. So this was the bullish signal we got on the New York Composite. And let me just widen out this chart a little bit. And what you see is that during periods where we finally get going up above this 200 level, it's typically pretty bullish. And we had that back in April 2016, where a lot of stocks started to join the party. In 2011, we had a brief wiggle up there and then a pullback, and then we took back off again. But in general, this is kind of a bull market thrust, and so that's kind of the way I want to lean, and that's why I started to add to some positions, as uncomfortable as it feels. The Canadian dollar is still trying to break out of this downward trend here, and again, that usually is impacted by oil. Oil keeps going down, but the Canadian dollar isn't really following oil down right now. So it's been sideways for the last 6 weeks, whereas oil's obviously been pulling back a lot harder. This is the Canadian dollar or Canadian market year to date, and what we see is we're holding up around 14% since the beginning of the year. We did get a positive PPO cross here. That is quite bullish. Happy to see that. And if maybe I'll just unwind this a little bit and go back 1 year. Just to give you a feel, we don't like this weekly or this daily PPO going below zero here. It's just, really a problem where the market starts to show weakness. So that's one of the concerns we have, is that we're below zero, and if it was to dip and take off, that would be great. Right now it just seems to be waffling here and doesn't have a real direction. Quadruple witching is coming up, and it has been influential in Canada. You'll notice in September we hit the highs, and in December we hit the lows. The March meeting, we haven't done anything since then. We're roughly right where we were on that day. So we're within 50 points, 100 points, nothing to really get excited about. And that next one is June 21st. So keeping an eye on that, maybe that would restart the market here, but watching to see which way the market leans on that day for sure. The US dollar has broken its uptrend, both this uptrend and the flatter uptrend, and now is trying to hold above its 40-week moving average. We did get a turnover on the PPO pointing down now, so this would mark lower highs and lower lows, higher highs and higher lows on price. Very interesting, but the market doesn't seem to be pushing the US dollar aggressively either way. Okay, let's talk a little bit more excitedly about the Japanese yen. One of the things that's going on here is the yen has been trying to break out higher, and this is a weekly chart, and seeing that breakout would be really impressive. That would help gold. Typically helps commodities, doesn't help Japan. Would probably be weak for the stock market, but as you can see, we briefly pushed up here last week and then pulled back, and then this week so far we've made a lower high and a lower low. So want to keep watching that to see if we can get back up. It would be nice to at least get back up to last week's high before the week is out. And I'm recording this on Tuesday, June 11th. Here is the Aussie dollar, and it is also trying to break out. Now, the one thing I will say is the commodity countries at the end of May all stayed above their 20-month moving average. Russia, Australia, Canada, Brazil. But a lot of the other markets in the world didn't. So the Russell, the New York Composite didn't. The S&P and the NASDAQ did. But England, France, China, Japan, South Korea, Germany, Spain, Italy, all broke below. So I'm thinking there's something going on in the commodities, and what we'd like to start see is that trade start to perk up. And if that was going to happen, then we want to get on board with that. And that was some of the things that I've been adding to. So, excuse me, here is the European euro, and what we see here is it's broken out, but not with a lot of real aggression, and this week it's just paused after last week's big move. I would like to start to see, it's just been grinding sideways for almost 6 months with no real move. Every day big overlap, or every week big overlap. So we're just not getting the price action that's causing any directional movement. So it's much harder to trade that. Looking in on the TSX, this is a monthly chart. You can, I mean, this chart pretty much says it all, right? We've had a big uptrend. We keep rattling around it lately. This last move hasn't been able to get above it. We've got support under the three major lows at a different level, but we just don't seem to have the enthusiasm. And here, the one piece of good news is the PPO is actually turning up and pointed slightly higher here, because it looked after breaking this 10-year trend that it was literally going to roll over and fall out here. Doesn't mean it won't. It just means it's still trying to make up its mind which way it wants to go. But you can see the momentum either way is pretty weak, just barely above zero. Looking on the weekly chart, the RSI is holding above 50, which is bullish. We don't want to see it go below 40. The fact that it got up here around 70, normally I'd say it has to hit 70. Well, it got very close to 70. So let's call it a new bull market until it proves us wrong. But it's this pullback to the 50, maybe to the 40 that we want to hold. And then we need it to break out to the upside in a big way. And if we don't get that, I think the real problem is there's just not enough inertia to kind of drive the market higher, and that's probably a bigger factor. So what I mean by that is we don't have a lot of bullish optimism right now where we did in early 2018, coming out of 2017, everybody was on this bull train, and then recently we've been, as the market keeps hitting highs and pulling back, then people are less sure of what's going on. So looking at this TSX relative to the S&P 500, we keep kind of pulling down, and we broke this trend. Maybe perhaps I can start putting a horizontal line here at 6. And if we could start to break out to the upside, that would be bullish. In terms of momentum, these commodity countries are still underperforming the US. And so as long as that's happening, we're probably not experiencing anything that's going to really push Canada forward. That chart doesn't have anything on it that we need this week. Here's the Fed meetings, and what you can see, we're going to have a Fed meeting mid next week. And that is definitely an awkward one because everybody has decided to start pricing in 3 Fed meetings this year. And of course, we've already had a number of Fed meetings behind us. So now we've got the June meeting, July, and then late August, October, and then December. So with all of that, we're sitting here, I guess it would be mid-September, not August. With all of those, we got roughly 4 or 5 left. And if the market expects 3 rate cuts in the next half year, that's going to put a lot of pressure on the Fed. So there's a lot of expectation that the Fed will cut. And one of the things I'd like to show is that, the Fed meeting in September pretty much marked the high. The Fed meeting in January pretty much marked the high. We're around the same levels as we were back then. And the Fed meeting in May, end of April, marked the high. So if we can't get going here, this is quite concerning to me. And if you'll notice the October, we pulled back, got to this one. And when this Fed meeting didn't give the outcome the market wanted, it pulled back. And then the Fed meeting in December, it really dropped quickly here. This was roughly a 10% move down. But the market's got a lot of expectations for the Fed here coming up next week, so that's why I think it's really important to remain cautious. For options expiration, we have a blue line coming this week, again on June the 21st, and I showed this with the Toronto stock market earlier. But what we want to watch and see is there any effect from options expiration, and the quad witching was a big factor back in September and December. They both fell about the same time as the Fed meeting. So we've got that situation showing up where the Fed meeting and the options expiration are both the same week. So that's pretty important, I think, coming through there. CRB, at least we're trading inside last week's range so far. A couple of days in, we haven't broken to new lows, which is particularly exciting because the commodities have been just continuing to fall and been very, very weak. The one thing that I want to point out about the commodities is you'll notice so far, if we started to turn up here as we test this prior low, we would make a higher low in momentum. And after commodities have been rattled so much for over a year, a higher low here would be quite important. So I don't know if it's the US dollar falling, but again, I want to keep watching the commodities because of all of their the country ETFs starting to perform better. Okay, so that's the macro backdrop. Now let's break into the sectors for Canada. And the one thing that I think is starting to show up that makes it more important is all of the commodity sectors in Canada are weak. Obviously, technology, this one with Shopify in there, is just roaring. It's over $400 now. The stock has been literally on fire since the lows back here, and it's up a couple $100, which has been an amazing ride. Yeah, here's one we could just put. So here's Shopify. And that trend is 410, and here's the daily chart just to give you an idea off of the December lows at 160 to 410. It's been quite a move. So it's 160 would be 420 would be 300% off there, or at least 2 multiples higher. So really a big move. Okay, so again, the technology sector breaking out off of these lows and took off to the highs and has just kept going. It's been a wonderful chart. So that's been great. I don't think there's any real value in going into the daily on each one of these. So we'll probably just focus on the weeklies. Here is the price of crude, and as you can see, it's wobbling, and the inventory data was piling up again. So it's pulling back in after hours to about 52.50. So we're hovering in this range, and again, there's no reason to expect a buy signal yet. What I'm starting to watch for is stocks that are holding up while the price is going down, stocks that are sitting at support, and if they can't hold, then I want to let them go. But again, it's this commodity theme in the background that has me a little more interested. So here's the energy sector for Canada. And you can see that in December we hit a low of 127, 125. We're currently at 136. So with this level, again, a higher low here would matter a lot. And we do get an announcement coming out of Ottawa next week on the Trans Mountain Pipeline. There was huge truck convoy of oil pipes moving through Calgary today. So perhaps that pipeline is actually going ahead, because it was pretty big pipe. So if all of that is starting to move, that would help the oil patch immensely, because obviously one of the issues has been just getting oil to market. So coming through all of those things here, we have this, the energy sector clearly in a downtrend for years, since 2014. And we're sitting here trying to build this base down here. This is going to be a rocky base, no question about it, especially if the world breaks down hard. Nothing to say this base will hold, but if the world can break out to the upside, because the central banks met last week and all agreed to do more QE if they needed to, which is just continues the movie. So anyway, as all of that happens, we'll keep watching. I think the bigger issue for us in Canada is, obviously that Trans Mountain will be a big deal. It's still going to be a 30-month project if it got going before the oil would flow. But I do think it would at least put the patch back to work, and we'd have some opportunities to start trading some of those stocks, and some of the better names could start lifting with the understanding that those are going ahead. The Canadian financials still sitting under this downsloping trend line going back to 2018. Some of the stocks have hit new highs, but not very many of them. And again, as interest rates come down, that's been harder for them to get a spread for mortgages and that type of thing. So we're on a PPO sell signal that just showed up in the last couple of weeks. We've tried to bounce off the 40-week. There's nothing to suggest, we're in a series of lower highs and lower lows on the big picture. So pretty tough to call it anything other than a downtrend until that changes. Okay, here's the different banks on a performance chart, and this goes back to the beginning of 2018, and you could kind of see there's a real split taking place here, where 2 banks are poor, 2 banks are in the middle, and the rest of the banks are clustered near the top. The 2 at the bottom, I want to show this chart just because it's important. Canadian Western Bank is in blue here, and it's clearly the worst performer. But if you look across this brown line here for Laurentian Bank, this looks like it's building a nice base and wants to break out to the upside. So that is positive. The next two lines here are CIBC or CM, and the pink one is Scotiabank. Scotiabank is much more representative of emerging markets, so if they actually start to get a bid, we should see the Scotiabank chart start to improve. And we are seeing nice price action out of the Argentina ETF. So perhaps that's going to start picking up for Scotiabank. But looking at the other ones up here, they're all clustered together with relatively the same performance and have had it for a while. Now, if we just slide this out to the new year, I'm just trying to pick up since the end of, here, I can just do it in here. That's probably okay. Click one, and there we go. Okay, so that's since the beginning of the new year. And again, it's been a horse race. They're all kind of all over the map here, but the two that were the worst performer over the last year and a half are in the middle of the pack this year. So a bit comforting, but this pink line with Scotiabank and CIBC, pretty tough here. So they're only up 3% and 5% on the year. The overall Canadian index is up 14 for Canada, the whole market. And we've got some up here at 20%, which is the Laurentian Bank. So it's really been doing well. Okay, emerging markets. This is just showing Scotiabank compared to, and again, if I think it's RGTA, if I'm ARG. I can't remember. I was going to pull up the Argentina ETF, but maybe it's RGTA. No, I got it wrong. Anyway, what I was hoping to do was just show you that some of these charts are starting to move commodity related, and if they could, like as an example, you see this black line here moving above its 200-day moving average. And so if we're starting to make higher highs and higher lows, this is a great place to get on board with something like Scotiabank. Okay. 10-year Treasury. We see on this one, last week we made a spike low and the RSI is below 30 on a weekly chart. This is pretty meaningful. We don't spend much time down here with an RSI pounding on the ground that hard. So who wouldn't expect somewhat of a bounce? And so this week it's tried to move up, and since then we've had an overall equity market bounce as well. I think the bigger deal is just how oversold this whole thing is. And again, if you go back and look at charts, when the bond market trends, it can trend a long time. So we could get a bounce in here and it could jog whatever. Back here it was a month in 2016, and then it just kept unwinding. So it's not necessarily that it can't keep going. I think the bigger issue for us is just to at least have expected a bounce, and there isn't that strange. Okay, Canadian healthcare, obviously this one's influenced by the marijuana names, and what we see here is it's trying to get back above its 40-week moving average, which is upsloping. But again, the PPO has been rolled over for a couple of months already and is just barely hanging above zero. This is a bullish place to buy if this starts to turn up here. So if we get a little more bullish energy in the healthcare space, BHC is one of the stocks we need to watch. There are a few biotechs trying to make moves, but this is, I'll call it at support. It needs to hold this 28 level. I don't want to see it drop another 20% down to 23. This was the former Valiant Pharmaceuticals. And then if we just look at the marijuana ETF, that gives us an idea. And again, it hasn't been really positive. It just keeps dragging down. You can see the volume has been almost eliminated in here. Now, from very quiet volume, it suddenly spiked in August of 2018, remembering that October was Weed Wednesday, and then the market's been not really doing much since then, and everybody's now starting to watch the edibles market, starting to watch the U.S. companies, Canopy Growth Corp is the U.S. side for that one. And again, just hovering in here. Some of the more exciting names are Valiant Growth Works. That stock's just holding up in the top right-hand corner. Oils.ca. The stock's just holding up in here. So starting to see some different names. But again, very difficult to trade them right now. They haven't been acting great. Might be time to just let those pause for a little while longer. Okay, looking in on the consumer discretionary here, what we see is this has been pulling back, and we've had tough charts out of Hudson's Bay. Names like that have been in a difficult location. Now, a bounce off the zero level here is quite important, and it's not uncommon for the strong retail stocks to start rising up starting in July. So we'd need to see that, but again, we need to see Canadian Tire start to rock, and that chart's not exactly wonderful. HBC's not exactly wonderful. It did spike up this week on a buyout rumor, but Reitman's in the meantime, I think, got just crushed. So it's a balance, one up, one down, but we're not getting anywhere really on the consumer discretionary names. We could go into some of the other stocks, but I think in general, just looking at the chart, not great. The fact that we just made lower lows than we made in March now puts us, so we have a lower high, and we had this low. We rallied up with a 3-wave rally. That's usually a bear market rally. And then you'd expect 5 waves down. So this is wave 1. Wave 2 would continue a bit, and then wave 3 would be a hard push. Not want to predict that, just saying let's watch and see, because if this support doesn't hold here, we're probably going to drop another 10% on these consumer discretionary back down to the support level at 170. The RSI holding at 40 here is a very good place for it to bounce from. Again, through the whole uptrend, that's where it starts from. So we'd like to keep watching that. Okay, let's go into consumer staples. And what we're seeing here, some of the grocers have held up pretty well. This has been an okay chart, right? But the scale isn't moving very fast. Since the breakout, this is up, well, not bad, a little more than 10% or 12%, so that's pretty good. But that breakout occurred kind of at the beginning of the year, and the whole market's up about that much. It has rolled over in terms of momentum, so it's a little bit of a tough place to want to start adding to, that's for sure. Okay, the industrials, different parts of that have started to move again. The railroads have been holding up nicely. That's this blue and green line in here, just to give you the general trend. They've been recently hitting new highs. And we've had other companies start to break out, but the companies like the automakers have been really down hard. Automobile parts have been hurt. So, it's been choppy. They've been, since, let's call it mid-April. They haven't gone very far, if anything, $5 on 260. So a little bit rough to try and make any money there also. Okay, telecom, this one just keeps pushing up into the right-hand corner of the chart as a defensive. So that's all good. We do have a bull market signal that showed up in early April, and now we kind of be wandering up there. There's some big dividend payers. I think Bell is in there. And what we want to watch for is on these, if the market was going to turn, then we'd start to watch for a shift from defensive, like telecom and staples, into consumer discretionary and industrials. With the industrials chart living up in the top right, that looks pretty strong. But this defensive sector, like the telecoms, is also holding up here. Probably should with the oligopoly that they enjoy. Okay, capped materials index. So this is the metals and the miners. One bullish thing happened here, and that was that these have started to bounce, and this was the gold bounce right at zero. And again, if this could start to break out through this downtrend, this would be a pretty important development. So watching this pretty close, we have moved back above the 40-week moving average. So this is at least some comfort, and we didn't have to go all the way down to the 30 level to get the bounce on the RSI. So all of these things are suggesting a little higher momentum. Momentum on PPO, the full stochastic bounced without going down to 20. That's a pretty good one. Like that one a lot. And then the RSI moving above 50 is helpful, and the fact that it didn't get down to the 30. So I am particularly interested in the gold sector right now. I know it's hard to want to like gold. This gap down a couple days ago, makes it difficult. That's not really bullish price action, but you still get gaps down in an uptrend. And then what we want to watch for is see if it can take out the prior high here. After a sudden move up, it was hard to find anybody who wants to step in and buy something that's kind of gone vertical for 10% in a few days. Okay, the global gold index here, again, just trying to break through this horizontal level, call it 200. And if we can get something like that started to turn up, this PPO bouncing off zero and turning higher is a very bullish setup. Now we just need to make sure it follows through. I wouldn't want to let it roll back over and start making lower lows than last week. Moving into the income trust. Whoops, I think I missed the weekly chart there. Moving into the income trusts. Let's go get the weekly chart. The point I want to make here is they've been sideways for the last 2 or 3 months. Now, if you're getting your income, you're probably happy with that. That's okay. I think the bigger issue on here, obviously, is the momentum seems to be drilled out of it. And just looking back at the PPO from these very high levels, it's not usually a place to add positions. So just caution on being following into those. That was the income trust. This is the real estate. It's also defensive. But again, same thing. Hasn't done much since March 1. Wobbled, gone sideways. The 50 period or 10-week moving average has rolled over to flat. And the full stochastic's pulling back. Now, this could bounce from a very high level, but you can just see normally these things, when they get this extended, usually need time to correct. And you're better off to pick them when they're near their lows, not when they're coming off the highs. Okay, utilities, obviously they've been doing great on both sides of the border. Way up here, RSI is very overbought. Everybody in Canada trying to find yield. And this is broken out to new highs here. It's still trending higher, so there's no reason to sell anything, but we are starting to get long in the tooth in terms of momentum, and you can see back in 2016 they rolled over as the market moved into a bull market phase. You might remember that everything else started to take off, and it was all uphill for the growth stuff 2016 through the beginning of 2018, whereas utilities really didn't do anything for a year and a half. Okay, the bullish percent index for Canada is a little weak. The one thing that we're noticing here is it's downtrending pretty hard. And again, I talked about this one early. This was the first chart I put up. We just want to see this get back into bull market mode up here around 65-70%. And we want the percentage of stocks above the 200-day moving average to really get up here. Now, what you'll notice is all of these rallies that have rolled over here haven't got much above the levels we're currently at. So in order to really start to change things, we'd really need to see an improvement. And with such a large percentage in materials and energy as a percentage of stocks in the stock market, in the Canadian market, that's probably what would have to get infused with some enthusiasm in order to start breaking out. So think about that. That's probably one of the bigger issues out there is, are those sectors going to break out? Here's the good news. Australia broke out to fresh new highs on a monthly basis last month and is continuing it this month, so that's very bullish. If we look at Russia, I think is the next chart. This one has obviously broken out, and it is now at new, 52-week highs for sure, and very close to new 5-year highs. So that's very bullish, turning up here on the PPO. So lots of good things. So as long as the U.S. trade dispute is kind of in play, it looks like Russia seems to be enjoying this more than the two in the trade dispute. So Brazil is pushing up near the highs. If it was to close here, this would be the highest monthly close. Obviously, we're only in the middle of the month, but it's been consolidating after a big move up, and now looks set to just wind sideways, and maybe from here the momentum can keep improving. It did test the 10-month moving average, which is the rough equivalent to the 200-day. So if this is going to start to break out to the upside here, that's just more bullish for Canada. Eventually, these commodity countries usually move together, so Canada's pausing a little bit more than everything else. South Africa is another one. I don't know that we want to use it as a bell tower in any particular way, but the big important thing here is there's been a big level of resistance, and it's just trying to push through again. So as all these commodity countries start to turn up, maybe it's rare earth metals, maybe it's just metals in general, maybe it's ag, maybe it's oil. Lots of reasons to be thinking about it. I have been talking about this long-term trend line on copper and how it's being tested right around this 260 level. We want to see that work out a little bit better. I took a look at copper on a daily chart today. Let me just go get that. And at least it is trying to break out of a base. So that was comforting. It didn't manage to hold up very well. But after this big downtrend that's been 6-8 weeks, it is trying to rally. And I guess the way the rally starts is at least you get a 2-week high today. There's some volume that showed up here, starting to break this downtrend in momentum. And we got a PPO buy signal today. So there's some things going on that at least make it comforting for us to start looking at. Lumber, same thing, sitting on a long-term support. Maybe I'll just go get that. Trying to hold this 300 level, and the lumber charts actually perked up last week, and they're trying to perk up again this week. So just keep an eye there. Let me expand this out to 12 or 15 years, I think it is. That would get us the data we need. And the point is that off of this 09 low, we're trying to hold that trend line there. So let me just go grab that. And again, a breakout here would be very positive. So if you're looking for support, we have a double bottom in play right now. This 300 level has been important all across the chart. But, bouncing off this big 10-year trend line is also a very bullish place to expect it to hold. And if it didn't hold, that would mean something more severe. So let's assume that central bankers have the same chart we have and realize that we need to start getting all of this stuff to bounce up. I'm not sure they have that much control over each commodity, but my point is basically all of these commodities are trying to bounce off long-term support, and if they don't, we're going to go through a much more dire period, but let's at least play the rally. I think that's all I want to cover. I don't think there's any real reason to go into the bonds. The TSX 60 capped index, nothing really there for us. And again, the banks aren't looking that great, so it's very hard to start to buy that. I do want to show some of the stocks that I've been looking at. These are a list of the Canadian stocks that have broken out to new highs this month already. And so if we just go look at them 10 per page, and we'll just let me just put them on a weekly chart. And again, that's a preset that I've got. And then scrolling down to the bottom here, you can apply that style to all the charts, so we can just look at them all in a 5-year picture. Because I think more important than a brief breakout is something that breaks out a long time. And you can see this is the gold bullion, and so it's trying to actually get moving here. That would be quite comforting to me. There was some volume starting to hit it last week as it tried to push up. The real question is, can it actually keep going? And I think it might require the US dollar to weaken. Okay, so these are in no particular order, but government bond index, there's a lot of them in here. US dollar currency, euro copper, this is a nice chart. This one just keeps grinding higher, has broken out to the upside just this week. So even though copper's been basing, this chart's been performing really, really well. Full stochastic just turned back up here, so this looks like it wants to go higher. Investment grade bonds, I'm going to skip over most of the bonds because I don't think there's any real information here. Horizons Corp bond, Harborside, this chart, yeah, nothing there for us. K2 Mining, this is nice, starting to push up to the upside here around my scan restricted under $1, but this is a nice upsloping chart, so that's positive. Northwest Healthcare continues to push higher, yield of 6%. Monthly income fund by PIMCO. The scale here is very small, so just because this line is moving up doesn't mean much. You've gone from $19 to $20, so up 5% since the beginning of the year, and the stock market's gone up 15%. So Purpose Hill Savings, that's a pretty smooth line. Invesco 1 year. Real Matters, this is a marketing company, I believe. New 52-week highs here, so that's bullish. And again, nice little uptrend since the beginning of the year and trying to break out a little bit higher. Probably one worth writing down and even taking a look at. MSCI World, low risk weighted, is still pushing up to new highs, so that's good. Silvercrest Metals, this one's just trying to get going here. Did hit a new high in early June. What we want to see out of this chart, obviously, is a breakout to the upside, so it's poised to do that right now. Summit Industrial just keeps going. That's a great chart. Vanguard Canadian Bond Fund. VMed Healthcare, this one just keeps pushing up really, really nice. Nothing wrong with that. Nice pullback and then grind higher here. Broke through the 875 level. It's still trying to work going higher. Okay, the first three were all bond funds here, so we'll scroll through those. Government bonds, Canadian long-term bonds. Again, I think it's just time to be a little bit cautious on the bonds. They've run a long way. Wow, this whole page is all bonds. They're alphabetical, so probably B or something is getting it done here. BMO, mid-federal, short federal, high corporate. Sorry about the scrolling. I'm just trying to get to a real stock. Element Couche-Tard breaking out to 85 here, so this is a nice bullish thrust. Loblaw companies trying to break out, so that's more bullish. Again, and we saw this on the consumer staples trend. This stock has been pushing higher since mid-2018. A really nice move, but I don't think you want to expect more from that. Probably a good place to ignore it. Here's Cogeco Cable trying to get through $90. That's actually impressive to see a cable company getting through, because there's a lot of cord cutters out there. Marnell Chapeau breaking out to the top. Morneau Chappelle, I think I should have said. Breaking out to the top side here as well. And then Sienna Senior Living, this chart's really nice, 5% dividend. Thomson Reuters, that chart just keeps going. I don't know what they've changed in their software, but obviously somebody loves it from 50 to 90, so that's really good. Intact Financial, this one just starting to break out of a kind of a 2-year pause here, so this is a nice move. Timber Creek working its way higher, not fast, but working its way up. Chartwell Residential REIT, this is nice. Trying to break out to a new 52-week high. That's what my scan was for. So the high so far must have just been enough to get through 1517. Yeah, high of 1519. And obviously, if a breakout from this nice 4-year base would be a big one, you'd want to enjoy the ride on there. And that one has a yield of 3.9%. Commodar REIT breaking out to new 52-week highs here, very bullish. First Capital on fire. Killam Apartment REIT, this one's got a nice trend line. RioCan REIT just keeps shooting up to the top right. And CT Real Estate Investment Fund just broke out to new 4-year highs. Another comfortable looking stock. Okay, again, these REITs have been holding up pretty well. I'm a little worried about trying to buy more of them with kind of the extension that they've got. But this one here looks set up nice. Plaza Retail REIT just starting to move to new 2-year highs. That's pretty good. And Bellis Healthcare, I don't know why the scooter, it dipped below 45 cents. So that's why the scooter ranking went flat. But this stock looks like it's in a nice uptrend here. So just keep enjoying it at $1.75. N-Wave, this one's really been moving. Neptune, I think this one might have something to do with pharmaceuticals, or sorry, marijuana medical marijuana area, and just broke out to new highs last week, pulled back a little bit this week. Good place on the chart to watch. Extendicare just broke out to new 52-week highs, so that's bullish. Canadian Pacific made a new high this week, just keeps riding the rails. Exchange Income popping up to new 2-year highs there, so that's nice. Air Transat on the merger keeps running up here. WestJet Airlines got bought out, so that was big, broke out, but we can't do anything with that chart anymore. And Alistair Gold, this one, just gaps up, gets you in, and then moves down significantly, down over 10% already from the breakout. Orion Resources pushed to new highs, so that's an interesting one. Metals and mines like that, and it's holding up there this week. Great Bear Resources breaking out. Agnico Eagle, again, we're going to start seeing gold names in here, so that's good. This is a nice breakout on Centerra Gold, new 52-week high, but it wouldn't take much to be new 5-year highs. That 935 up in the middle there is pretty brief, but you can see getting through $8 is a real important level. Franco-Nevada trying to get through to new all-time highs here. Doesn't have much to go. Last week made a good stab at it. And Kirkland Lake's been a monster. Just continues to deliver up into the right-hand corner of the chart. Semifo, so you're seeing all of these gold names. CGI Group, software company, just keeps grinding higher. This has been a relatively smooth ride for investors. If you're into smooth rides, that's a nice one. And here's Open Table. It hasn't done anything since breaking out. It got through 51, and it's just paused at this 55 level for a couple of months now. Shopify, again, on fire, just up and to the right. Bell Canada kicking out, and I think it's going to pay out a dividend here right away, so that's another nice one. TELUS shooting up and to the right, so another telco. ATCO Utility holding up here. And ATCO and Canadian Utilities have been selling their carbon-based assets, so they're changing up their business, so that'll be an interesting one to see if their stock gets killed for that or supported. Algonquin Power, obviously another utility breaking out. Brookfield Renewable Energy, that one really just started to get through $42 here. Pause there, and it's on its second or third week of grinding away from that level, so that looks good. Canadian Utilities trying to break out to new all-time highs. Emera, really a nice uptrend going there. Fortis, again, all of these utility companies, no real surprise. TransAlta Renewable trying to get through all-time highs. Looks like it's turning up again. Just Energy shooting up above to new 52-week highs just last week and this week. Big push, so that's nice. And nothing wrong with buying a new 52-week high. Superior Plus breaking out to new 52-week highs and new all-time highs. So something going on in that stock. Gas utility, I guess. So that gives you an idea of some of the, I'll call it breaking out to the upside. The other side of the market, the absolute other side of the market, is the energy stocks. And the only reason I want to start to go through them is because so many of them are sitting at new 4-year lows. And or near 4-year lows, and the idea being, if they're going to start breaking out, and I'm just talking trying to look here, if they're going to start breaking out, a lot of these charts are shown twice. But here's Journey Energy near the top side in the first part of this list. These ones are actually holding up nicely. Trans-Canada Pipeline has been pushing up higher. They had to change their names because of the word Canada. That's just hard to believe. Here's Canadian Pacific Railway pushing to new highs. Parkland Fuel. These are all oil patch related. This Parkland, holding up in here around the 42.50 layer. Pays a 2.8% dividend, so there's some people that like that. And this Parex Resources, I like this chart a lot because if you think about it, it's been trending higher, even though oil's been so difficult. Now, it did make a lower high here, but it's still holding above its 40-week moving average, and it looks like the full stochastic is starting to turn up. And the PPO, if it was to turn up above zero, that's pretty bullish. And you saw that in the middle of 2018 and went on another run from 19 to 26. That's a nice move, 30%. So these charts, this one's just sideways. I don't have them all lined up as pretty, which ones to avoid, but I will say that these ones at the front end are quite interesting because they're very close to prior highs. Now, over here, Pembina, this chart's been grinding higher. Africa Oil, this setup is really nice. I don't know anything about their business. From an investing perspective, I love the chart shape. I like the PPO going above zero, the full stochastic turning up, Scooter moving to 75. There's just lots of good things there. This North American Energy Partners is kind of a road construction and that kind of thing. So they're doing a lot of bigger projects. Their full stochastic is back in the buy zone. So if this was about to turn higher, that would be nice. Big oil companies like Royal Dutch Shell are holding up okay. I mean, when you think oil's dropped $16 in here and these have gone sideways, quite interesting. Enbridge really fell out of bed after they got more holdups on their line 3. Amoco grinding sideways, hasn't done anything really for a year, but again, still holding above its 40-week moving average. PPO above zero, trying to turn up. The full stochastic just turned up. So that's a nice buy signal so far, and you can set your stop nice and close. Horizon North Logistics, I have a problem with this just because it's so newsy. When it gets contracts, it's great, and when it doesn't, it's hard. But the chart is making higher highs and higher lows so far. PPO right at zero. If it was to fail here, you want to run the other way. But if it turns up here, this is a really interesting entry. Phoenix Energy, this one, hasn't pulled back like the rest of them. It's actually held up quite well, sitting in around this $3 with a high at $3.50. Lots of those guys in the oil field services are just bombed out. So that chart looks better. Here's ExxonMobil grinding sideways. I can't find any reason to buy that chart. Synovus Energy, this chart has been building a huge base. I know there's lots of people that are fans of it here. The one thing I like that I find constructive is the momentum has been uptrending, and if it started to turn higher right about now, this would be quite bullish. So quite interesting here at that level. Okay, Interpipeline, nothing really there. This just has a casual downtrend. So while it does pay a pretty good dividend, I don't like that downtrend over time, over a long period of time. Eventually, I feel like they're just going to cut the dividend, and you'll find out in a hurry. Prairie Sky Royalty. Now, I like these, and here's the reason. We're very near 4-year lows. You're sitting within $1 or $2, and they pay a royalty each month. This is 4.4%, so call it 0.5% per month. And then, a bounce off here would be nice, and it did break the downtrend in momentum, and if it could start to turn up here, this would be very bullish. Now, we don't have the turn up yet, so it could be setting up just like it did back in here where it rolls over and goes down for another year. I think the reason I like it is because it's near support. Now, over here you could say the same thing as it rolled over, it was trying to hold, and then when it broke, just let it go. But if it can break out of here, this is a really strong place to take a look. And again, one of the reasons is if we got some good news around a pipeline, that might help here. So in Imperial Oil, there's no real reason to own this stock. It's grinding sideways for 4 years. Canadian Natural Resources, I guess you could say the same thing, but the difference is they've been buying assets left and right. They bought all of the Shell assets, I think, at a sale way back here. They bought some Devon Energy assets recently. They are going to have 1.3 million barrels of production, and any change in pipelines or market access for them, I went back and looked at some of their numbers just to give you some ideas. Their cash flow numbers way back were 17 billion, and now they're up to 10 billion, and oil's nowhere near where it was way back then. So I think it was in 2014 that kind of cash flow number was there. So they went through a big drop down, but their cash flow is up huge. And with the change in volumes, if anything ever started to work for them, of that new pipeline to the coast, I would suspect that they're one of the companies that would get more access than anybody else, because they also would have bought the rights to some of the access that Shell applied for and that Devon Energy might have applied for, both in pipelines to the coast and pipelines south. So I find this one compelling. I do own some of the shares in here, but the reason I want to say that is lately the stock has been holding, call it $35 very well. While oil has been falling, the stock is just holding in here very close to kind of this $35 threshold that seems to be in play for the stock. Maybe it gets down to 30, I don't know, but they have immense cash flow. Paying off a 1% yield looks like, just based on when they pay out their yield, paid in March, so it's probably going to pay one in June. Yeah, they paid one in June in 2017 and in 2018. So there should be a dividend. Maybe it already came out and I just need to get that chart updated. Again, I like that chart, and it's Canada's largest producer, so there's something there. Ensign Energy, I think you've got to stay away from these energy, oil and gas field services until the chart improves. They're tough-looking charts. I think you want to be in something that's got bigger cash flow. Pason Systems puts information transmitters, collectors and transmitters on drilling rigs, and so obviously as drilling rigs slow down, this slows down. This chart hasn't gone anywhere. It does pay a 4% yield, but if you could start to get it to turn up, this is one of the more interesting ones, but it hasn't done anything yet. So Suncor still drifting lower, and again, very close to new to 2-year lows here. Some people would say, well, it can go all the way to 35. I agree. I'm just saying, start to watch them, because we did get the big bounce off the bottom here, and if they are going to start turning up on the back of maybe some news, that would be a nice place to have been aware and just at least know that they're going on. Here's Valero out of the US, big downtrend here at 2-year support, so it needs to hold there. Enerflex had an uptrend going. It started to break it. It's very near 2019 lows. PPO right at 0. It doesn't look like it's ready to turn up yet. So again, another service related company. They build equipment for the oil patch. Cogeco Energy, they had a big announcement after the bell closed today about some big natural gas find, I think in Colombia. But anyway, going sideways. Freehold royalty, this thing pays off a 7.6% dividend. You're at 4-year support. They basically get a spin out, a royalty out of everything developed. So, this thing was $13 just under a year ago and is all the way down at 8. So, that's a 50% upside if it just got back to where it was. And if we actually got oil flowing out of Canada, then this thing could easily make a very big move. I do like the fact that it's, testing the kind of prior highs on the PPO. So waving here and then starting to turn up would be nice. ConocoPhillips, this one just keeps going down, but it's got a 2-year low or a 1.5 low sitting right here at about this level. So if it's going to double bottom, this is support, and if support lets go, then it's going to keep running lower, but it's a nice line in the sand to trade against. Secure Energy Services, another oil and gas field service, hard to buy it, but you can see that's $6 main support. High Arctic Energy Services, again, very close to 3-year level in here at 325. Black Diamond Group, similar issues, just the chart's going the wrong direction. It's hard to own. Shawcor, they put coatings on pipe and stuff, and they're testing a double bottom. They've already taken out their 2016 lows, so it's hard to want to buy this, but if anything ever started to improve this downtrend, this is a big company. They could do a lot. $37 was their price 2 years ago. It's trading at $17.50, so again, another stock 50% off. Vermilion Energy Trust, their majority of their action isn't in Canada, but they're trading near 4-year lows, so that's just as disrupted as the others. Anyway, with that, I should say thank you. Thanks for taking the time to join me. Lots to look at. Keep your heads up. There's risk both ways. Thanks, everybody. Bye-bye.